A better-than-expected October inflation print fuels hope that inflation has peaked and sends stocks racing. The Nasdaq rallies over 7%, the S&P 500 over 5%. The Treasury yields and the dollar index also slide as inflation comes in at 7.7% over last year, the lowest since January and below the estimated 7.9%. Better than expected US inflation numbers see Asian markets start with a big gap up. The SGX Nifty too indicates a very strong start for the Indian market. Crude oil gains about 1%. Brent hits $93 a barrel as US October CPI numbers offset worries of lower demand due to COVID-led lockdowns in China. And Eicher Motors sees strong volume growth and market share gains in a strong second quarter. Apollo Hospital surpasses profit and revenue growth estimates while margin is in line. Strong recovery in volume is expected from M&M in the second quarter. From the broader market, watch out for earnings from BHEL, Hindustan Aeronautics and Z Entertainment later today. Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those were the top headlines that we're tracking, and it is a good morning across the board for the markets. We got that solid handover from Wall Street, and on the back of that you have all of the Asian markets which are opening with good gains. In fact, they opened with good gains and have only moved higher since then. Take a look at the Hang Seng markets. Up 850 points right now. It's an over 5% gain that we are seeing for the Hong Kong market. You have the Taiwanese index, which is seeing gains of 3%. And across the board for Asia, you're seeing this kind of move come through. So the Nikkei market's up 2.5%. You have Shanghai, which is seeing gains of 1.6%. Straits up 1.6%. So all in all, there is just good momentum seen in all of these markets after we got that very positive handover from the US. The SGX Nifty is up on your screen, and it is indicating a 300-point bump up at the start of the trading session. So we could open above that 18,300 mark, which has, as we know, been quite a resistance level. So that is going to be an important level to track. But with that, let's actually talk about the big cue from Wall Street that just sent markets racing. The CPI inflation for the month of October came in better than expected. So the consumer price index grew by 0.4%. This is for the month of October versus the estimate of 0.6%. Now it increased 7.7%. This is from a year ago level, and the estimate was of a 7.9% increase. This could be an indication that inflation pressures in the US could be starting to cool off. CNBC's Rick Santelli filed this report earlier.
CPI for the month of October up 0.4, definitely cooler than expected, and 1.3 from June of this year was the high water mark going back to 2005. Up 0.3 when you strip out food and energy. The high water mark there was April of 21, up 0.9. Year over year, up 7.7. Definitely less than 7.9 expected. High water mark there, 9.1 in June of this year, going back to 1981. 6.3 on ex-food and energy year over year, and that was the one many were very nervous about. Last month it was 6.6. That is the high water mark going back to 1982. So on the inflation front, definitely a bit tame, but it's hard to say that these numbers are cold, especially year over year. Back to you.
All right, so while it is definitely positive news as far as, the kind of numbers that came through versus the estimates, of course, it is still a very high number. So reacting to the CPI number for October, US Treasury Secretary Janet Yellen said that the easing of inflation was a welcome relief for family budgets and said that the Biden administration will continue to address costs as they work to maintain steady job growth, lower unemployment, as well as economic resilience in the face of global challenges. So those are some important comments coming in from the US Treasury Secretary. But staying with the October CPI report and some important commentary, San Francisco Fed President Mary Daly said, and I quote, "1 month of data does not a victory make." And I think it's really important to be thoughtful that this is just one piece of positive information, but of course we're looking at a whole set of information. Likewise, Cleveland Fed President Loretta Mester said that Thursday's report suggests some easing in overall and core inflation, though she noted that this trend is still unacceptably high. Finally, we also got comments from the Kansas Fed President Esther George, who said that inflation continues to remain uncomfortably high and pointed out that the monetary policy has some more work left to do. Focus now really shifts to the Fed's next rate hike at its upcoming meeting in December. And Dallas Fed President Lori Logan, as well as Philadelphia Fed President Patrick Harker, both indicated that it will be appropriate to slow down the pace of rate increases soon, but they expect policy not to ease anytime soon and the Fed to maintain restrictive rates. So that is really a roundup of everything that came through and the important comments on the Fed, on the US CPI and what the Fed could perhaps do going forward. But let's also hear out some reactions coming into this US inflation report. Listen in and we'll be right back.
The thing about this, the most important number to come out of this monthly report is not the year over year. It's that monthly core inflation. That it came down is great news. It's not a trend because it's just 1 month. And it's not that low. I mean, at 0.3%, it's great that we've made progress, but that still remains higher than where the Fed wants it. And unless and until you get that core monthly inflation down in a comfortable range, I think the voices that are saying slow down, cool off, are still going to be a little muted.
This is what we've been talking about, I think, for the last 3 months. That inflation is much lower than the Fed thinks. I'm going to have another month of data to come through, but if the trends continue, I would stick with where we are. Now, I don't think they will. I think they're going to go to 50 and announce a pause. And that's what happened today. I mean, you know, the data today sort of confirmed that negative. If the data continues to go the way it's going, see no reason why it isn't, but it's going to be to go 50 and announce a real pause.
Hey, what happens?
And that's why we have a 1,000-point rally today.
I think that today's print certainly is a positive sign in the journey that the economic tightening that the Fed's been exercising is starting to have an impact. And I think one of the things that's going to be important to hear is to watch some data. We've tightened economic conditions materially and start to get a sense of where are the declines? You know, what really changed in the CPI data that led to that print? But it was certainly better than expected. Right. The markets reacted very positively to it. And so, now we'll have other data points over the course of the next few months. And obviously the Fed's trajectory from here will be very tied to what additional data points come from here.
They have been, they've said, listen, we're going to have more measured rate hikes going forward, but that doesn't change the fact that we think we still need to go higher on rates than we did just a few months ago. And I think the market is losing sight of that. They keep waiting for the Fed to get to that point of saying, we're going to cut rates. We're still a long way from that point. And I think that's the part that gets lost in translation. The Fed was counting on the slowdown in goods prices that we saw in declines in things like used car prices that we saw to offset the inflation that we're seeing in the service sector.
All right, that is some important opinion coming in on the CPI print. And let's also talk about what the U.S. markets really did after we got this data. Wall Street ended Thursday's trading session sharply higher because of this lower than expected inflation report. So the Dow Jones surged 1,200 points. The S&P 500 jumped 5%, which is the biggest rally that we've seen in 2 years. And the NASDAQ composite, get this, was up 7.5%, its best day since March of 2020. CNBC's Kate Rooney is here to get us a wrap of what was a session of mad moves on Wall Street. Kate.
Stocks soared today in their biggest rally since 2020. October's inflation rate came in lower than expected, raising hopes price gains have peaked, allowing the Federal Reserve to ease back on its interest rate hikes and avoid a serious recession. The Dow ended with a 1,200-point gain, 3.7%. The S&P closed 5.5% higher, and tech stocks, which have been especially weak lately, rebounded strongly, fueling a strong surge of 7.1%. Mortgage rates dropped sharply on the inflation news, with the average 30-year fixed loan plunging from 7.2% to 6.6%. But that's still more than double what it was when the year started. And regulators and the Federal Trade Commission say they're watching developments at Elon Musk's Twitter with what they're calling deep concern. A settlement earlier this year gives the government oversight over the platform's security and privacy practices, and several top executives overseeing those areas have resigned or been fired. That's the action from the U.S. market. Back to you in Mumbai.
All right, Kate, thanks a lot for getting us all of those details and moves from the US markets. But not just the US, we also saw wild moves in the European markets. They closed higher with the French CAC index closing with gains of 2%. The German DAX index surged 3.5% at the close. And the FTSE also closed with gains of around 1%. So like I told you, across the board, we've seen good moves come in for the markets. But with that, we're going to get into our first short break on the show. You don't go anywhere, because up next, we're going to drill it down to the specifics and tell you everything that you should track ahead of today's trading session. Welcome back. You're still tuned into Power Breakfast. Now, we've already taken you through everything that's happening with the global markets, but let's talk about how all of these overnight cues can impact us and all of the individual cues that you should track as we get into a fresh trading session. Our research team joins us now with the trade setup, as well as to take us through all of the individual stocks that could be in the news today. Rima, Nigel, and Vahishta are all with us. Guys, a very good morning to all of you. And Rima, to you first. It has been a solid session on Wall Street. We're seeing the handover in the Asian markets. So the start will definitely be positive, but take us through the details.
Absolutely. The one-line summary is inflation cools down and the stocks hot up, right? But we're seeing a fabulous rally on Wall Street overnight. Asian markets this morning are surging, and the SGX Nifty is suggesting that it's going to be a very strong start to begin trade with. It will get us closer to the resistance level. So the opening could be at levels between that 18,250 to 18,300, and this is where the Nifty had faced resistance earlier this week. So if you remember, the Nifty intraday high on Monday was 18,255. The Nifty intraday high on Wednesday was about 18,296. So this is a zone of congestion. Earlier this week, the markets did pause around these levels, retraced a bit. So let's see, the gap up opening will take us to that level, whether we have the strength in us to conquer that and then inch up to our all-time high levels. One of the big indicators is dollar index. The dollar index has now fallen to levels of 108.1. These levels were at 110 just yesterday and closer to 114 just a couple of weeks ago. The FI buying yesterday was fairly muted, just about 36 crore. This is the smallest buy figure seen by the FIs in the month of November, but yesterday was also a down day for our markets. Let's see whether that reverses, because general trend by the FIs is that they've been buying in the cash market. The DII selling picked up 967 crores seen in the cash market yesterday. That said, the inflows into the equity mutual fund via the SIP route continues to be very strong. So yesterday, post-market hours, we got the SIP data, and in the month of October, the SIP inflows have crossed that 13,000 mark. So that's the big picture. But of course, Pavitra, it's going to be all about those earnings, and there's so much to talk about on that front.
Oh, absolutely. We do have a lot of big earnings which came through, and we have Vahishta to fill us in with that entire list. Vahishta, a lot about the auto pack today.
That's right, Pavitra. A lot about the auto pack. Let me start with Eicher Motors. Strong earnings, largely in line with estimates. Market share in the above 125cc segment for motorcycles has risen to 30.2% in first half of the ongoing financial year versus 26% in on a year-on-year basis. So take on that. Ashok Leyland, again, very strong earnings in Q2. There's an all-round beat. The market share is at 32% today. Apollo Hospitals, revenue and profit were better than estimates, though margins came in line with the estimates. Jindal Steel and Power adjusted EBITDA was lower than the poll. The EBITDA has come in at 1,400 crores versus the poll, which was at 1,800 crores. The standalone EBITDA per ton has missed the estimates and is at 7,000 rupees approximate per ton versus the poll of 9,000 rupees per ton. For Muthoot Finance, though, the gold AUM is at 56,000 crores, which is up 3.3% on year-on-year basis. The loan per branch is at 12.17 crores, which is flat on a quarter-on-quarter basis, and the average ticket size is up 7.5% on a year-on-year basis. For Bata, though, the Q2 results were a mixed quarter. The revenue was a beat. EBITDA and PAT came in as a miss on the estimates. The revenues were at 830 crores versus the estimates, which were at 789 crores. The margins have dipped to 19.4% in the quarter, and the company says that in the mass categories, there has been some degree of sluggishness. Moving on to Power Finance Corporation, the loan growth continues to remain sluggish despite the base effect and reports the highest quarterly PAT in 30 quarters. For SAIL, weak results, three primary reasons. Realizations dropped 18% quarter on quarter. Raw material costs were high, and debt has spiked to 30,000 crores in this quarter. The last is Zomato. Operational metrics have improved even as the pace of growth comes off. So the food delivery segment EBITDA is positive at 2 crores versus loss, which was reported in the past 4 quarters. Back to you.
All right, Vahishta, thanks a lot for taking us through all of those individual results. We're going to keep all of these stocks on our radar. And finally, let me hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, what a good morning it is, right? For the bulls, they would have been waiting from late last evening itself for the markets to open up. And they're going to open up well in the green, so that's pretty good news. In terms of flows, the FIs, well, their flows have been dwindling down. But I look at the net institution, that's the FI and the DI number together. And yesterday, the net sell number was nearly 950 crores odd. We'll have to track this institutional data because, once that the sell number from the institutions go to around 1,500, 2,000 crores odd, then it's a bit of a worry. But hopefully, that doesn't happen. In trade yesterday, we did see that the FIs, they added some short positions. And now the short positioning, from the start of the series has moved from around 41% to around 47%. Now, that's a blessing in disguise for the bulls because if the flows are not going to be coming in on the institution side and you have shorts in the system, well, those shorts will have to squeeze out if we get follow through today. On the option side, yesterday, remember, we had weekly expiry that played out, and that's why we did see a bit of a recovery in the final hour of trade. Well, the 18,000 put and the 18,000 call, both of them were very, very active in trade yesterday. Now, if you look at the 18,000 call, the premium's around 160 rupees odd. At the start of yesterday, it was around 250 rupees. Now, those call writers, they'll be in trouble today because we're going to see that big gap up. You'll have to keep an eye out on that, whether we see some kind of unwinding out there. That's telling you that we're bracing ourselves for a bigger short covering bounce. The SGX Nifty is flying away to start. What are the levels you're looking at? Well, the 18,350 on a closing basis is something that the street will be looking forward to very, very closely. So that's something that the bulls will want. And support zone, the kind of writing we're seeing at that 18,000 put, the 17,850 and the 18,000 mark, that's been the buy zone. We saw that yesterday as well. And today, they'll be rewarded. Back to you.
All right, that is the trade setup for the day. Nigel, Rima, Vahishta, thanks a lot for joining us and prepping us up for this trading session. But with that, we're going to get into a short break now. When we come back, we'll get you all of the cues from the commodity markets and also some individual stocks that you should keep an eye out for. Welcome back. You're still tuned into Power Breakfast, and let's talk about some of the big earnings that came through. It was a strong second quarter for Eicher Motors as expected. So Sonia's here with the update. Sonia, in line set?
Well, it was a good set of numbers, no two ways about that, largely in line with what the street was estimating. Now, the market share for Eicher Motors in the Royal Enfield segment in the above 125cc segment has risen to 30.2% versus 26% in the first half of the year. So that's the big positive coming through. And overall, the volume growth is also very strong, up almost about 60-odd%. There are no problems with the headline numbers. Revenue growth of 56% is what we've seen. EBITDA has improved to 817 crores. On a year-on-year basis, the margins have improved to 23.2% versus 20.8%, and the profits are up 76%. However, the catch is that on a quarter-on-quarter basis, the margins have fallen. Margins are down about 112 basis points quarter-on-quarter because of the higher amount of volumes of the low-margin Hunter. Now, the big problem is this, that if Hunter continues to dilute their margins, will they be able to offset that with the lower commodity prices and operating leverage? So that's the big question. This quarter-on-quarter drop in margins is just a bit of a concern. Otherwise, the numbers are not bad at all. Back to you.
All right, numbers are not bad at all. Sonia, thanks a lot for getting us all of those details about Eicher Motors. But some more important news, the MSCI has released the changes from its semi-annual index review. So Vivek is here to fill us in with all of the details. Vivek?
Well, good morning. An important update coming in as far as the MSCI standard index is concerned. Along expected lines, the MSCI actually released the list of inclusions and exclusions for the MSCI India Standard Index. The good news is there are no deletions this time around. There are almost 6 inclusions as far as the MSCI Standard Index is concerned. And when you talk about the MSCI India Small Cap Index, 44 additions and 7 deletions is what we are working with. It's important to note that this time around, the actual flows that are expected into these stocks will happen on the trading session of November 30th, and the changes will be in effect from December 1st. Now, looking at the key stocks that have been included as far as the standard index is concerned, we're expecting the maximum amount of inflows. Bajaj Holding, around $130 million of inflows. Tube Investments, over $200 million. Indian Hotels, again, over $200 million of inflows. ABB India, over $115 million. TVS Motors, almost $170 million worth of inflow. And Varun Beverages, again, around $187 million of inflows. Important to see how these stocks react in the session today.
All right, we're going to wait and watch to see how these stocks react. Vivek, thanks a lot for getting us all of the details. But finally, let's also talk about the commodity space now. Manisha Gupta joins us as always. Manisha, good morning. Take us through the kind of impact that the US CPI coming in below estimates has had on, on all of the commodities.
Oh, it has had a good impact, as you can see on the screen. Gold is trading at an 11-week highs. We have seen 2.5% of gains come in for that one overnight. And when you look at the weekly gains, this is the best week that gold has had in 8 months. So that kind of a week we've been talking about. Silver has gained 3% overnight. You had platinum up 5.5%. Palladium gained nearly 6% overnight. So the U.S. inflation clearly having buyers come back into the markets here. And not just the precious metal prices. The industrial metals also have seen strong gains coming in, with the dollar index falling the most in nearly 8 to 11 years. Down by nearly 2% overnight has had that impact. So copper prices are trading at a 19-week highs. Nickel prices gained up by nearly 4% overnight as well. There are estimates that the demand from the battery sector in the winters would be on the stronger side. That led to gains here. So, well, yes, when it comes to metals, whether it's precious, ferrous, non-ferrous, all of them are headed for a strong weekly gain.
All right, that is the action from the commodity space. Manisha, thanks a lot for that update. But with that, we're out of time on this edition of Power Breakfast. The Asian markets are all green and a bright shade of green at that. Hang Seng up almost 5%. The SGX Nifty is indicating a strong bump up at the start of the trading session. Almost 300 points high, over 300 points high on the SGX Nifty. Thanks for tuning in. Bazaar Morning Call is up next.